Hi there, welcome to this weekend general update for the Australia Day weekend, the 27th of January. And we've had another very strong week in basically global markets all around. The only thing that was really weak on the last period was really gold and silver, which came under pressure, but everything else is going extremely well. So just a reminder about the general advice nature of this information. So just looking at the S&P, it ended up rising 17 points on the week and significantly closed above the 1500 point level for the first time in over 5 years. So since the peak of before the GFC, so they've now closed above that. So that's a very, very positive sign. And my view is that we're still in the relatively early stages of a lengthy bull market, and we're seeing that the technology index, the Nasdaq, and also the small and mid-cap index, the Russell 2000, continuing to lead the way, which is a sign of real strength in the market. So we'll have a look at those indices as well. Meanwhile, the ASX gained another 64 points this week, very similar to the gains of the previous week. And it's been an almost straight line rise since mid-November. Now, there's no reason why this can't continue, but it's getting fairly long in the tooth now without any sort of mild correction. So I wouldn't be surprised to see 3 to 5% come out of our market at the index level in the next couple of weeks. Of course, that doesn't mean that all stocks go down, and there are some terrific trends that are still continuing. So it's looking pretty positive, but certainly in the short term, the Australian market is a bit overbought, and many stocks are overbought as well. US dollar index was little changed on the week. It did go down a little bit Friday night, and the Aussie dollar is also down sharply over the last two sessions, which is really strange because you'd really expect the Aussie dollar to be going up when the US dollar was going down. But it indicates that maybe some money is coming out of the safe haven of Australian government bonds, some overseas money, and is heading back towards equities now, and hence a bit of selling of the Aussie dollar. So is this a change in sentiment? The trading range has been getting pretty tight. We'll see in time, but certainly a lower Aussie dollar would be good for mining stocks and other exporters. Gold lost $30 on the week, fairly significant move. It's still stuck in the trading range, as we'll see on the weekly chart for gold. But this move over the last few days could have been associated with futures and options expiring, may have had some sort of impact. But look, longer term, all this money printing that's been going on now for the last couple of years and is really starting to accelerate, with Japan chiming in as well, and attempts at raising inflation. Japan has actually now raised their inflation target. So this must fuel inflation in the future, which has got to be good for gold and silver, quite apart from any of the other supply and demand drivers that have been driving gold as well. So I think very, very positive signs for gold. Copper, steady, $3.64. It's been there now for quite a number of weeks. And oil rose very slightly to $96. So let's take a look first of all at the US dollar index. You can see it's really been in the trading range now since this last significant decline in September. It's been between around 78 and about 81, and really just moving sideways. So not a lot of change in that index. This is the S&P. You can see it's had two really good weeks. In fact, 3 really good weeks since the 31st of December, since they resolved that fiscal cliff issue, and a really, really strong 10 days or so. So we've got to go all the way back here, which is October, November 2007, when the index was higher than this. So that was quite a significant couple of weeks to get up to that level. This is the Russell 2000. You can see it's also been very, very strong, and has really been moving up very strongly since the 16th of November. In fact, much stronger than the general index. and is now at a new all-time high. So Russell Index hasn't ever been this high before, so it's extremely positive there. And we'll just have a look at the NASDAQ. Also very, very strong. You can see how overbought the RSI is at the moment, but look, there's just no pause or pullback in this at all, so there's no reason why it can't continue. And the NASDAQ is starting to get up towards the highs that were formed in March of 2000, which was the peak before the tech wreck, and technology stocks fell apart, getting back very closely to that level now. I'd imagine that the NASDAQ will probably pause around about that level. So that's maybe another 100 or so points on the NASDAQ. Just looking at some other global markets, this is the Shanghai Index. You can also see it's been moving very, very strongly. It was in lengthy decline during that period when everyone was concerned about China, but has really turned around quite significantly since the 4th of December. If we look at the UK market, this is the FTSE, and also not very far off all-time highs. It's broken to a new 2-year high, and is not really very far away from a 5-year high as well. So the FTSE also doing extremely well. Moving to our market now, and this has been nearly a straight line run since the 19th of November. It's been extraordinary, and other than 3 days that we had here in 3 very mild days down in early January, it's been a very, very strong run to the upside. But of course the peak in the Australian market is up around 6,500 points. It's not quite on this chart at the moment, but we've still got quite a long way to get back to our all-time highs. Just looking at the sectors in the Australian market, this hasn't changed for quite a number of months now. You can see healthcare on the top, leading the way, telecoms, finance, then a rather large gap to small caps, and then energy and materials bringing up the rear. But you can see they're all heading up, but certainly there's been no weakening of the leading indexes of healthcare and telecoms. Now let's have a look at gold. This is gold on a weekly chart. You can see it was a bit of a negative week, but really it's just in a trading range and hasn't really moved much now for about 6 weeks. RSI reasonably oversold, so I just would tend to think that we've got to be pretty close to the bottom. You can see we've got this inclined support line, and I would really expect to see the next move be to the upside. If you look at silver had also been tracking along quite well, outperforming gold over the last 2-3 weeks, but 2 sharp days down over the last 2 trading sessions. And the final chart I want to take a look at is the HUI index. So this is the gold stocks. Globally, they've just been puzzlingly weak, but I believe this could be a false break to the downside and then finally turn back up again. So I think if we do get a move back inside this trading range in the next couple of sessions, back above 430 on the HUI index, I think that would be a pretty good sign. So that's it for this weekend. Talk to you again soon. Cheers.